Hey everyone, it's Paul, Nagpal from Remax Hallmark, and just reaching out today to give you a quick market update for the month of May 2020. So I'll start off by sharing the showing activity, and this is something that I've spoken to a lot of you about. So what you see on the screen here is the showing activity in the last 90 days across the GTA. As you can see, the showings were quite strong. We had a really strong beginning to the month of March, and then it kind of slowly dropped off after COVID. And then there was this precipitous decline right when the emergency was declared. And we kind of hit a rock bottom in terms of showing activity around the Easter weekend, which is roughly about here, actually right here. So, and since then, you can see that the market activity has been coming up quite nicely. In fact, it's almost half of what it was pre-COVID. And you got to remember, the pre-COVID, we were touching new highs after 2017. So this is a really good sign that there's a lot of activity in the market and buyers are out there looking to buy. This slide kind of shows you what the market activity has been month over month. So, almost 95% more showing. So the number of showings has doubled since last month. Number of offers registered has doubled since last month. And the number of sold listings has almost doubled from last month too. I mean, that all points in one direction. And again, it's primarily because there was a lot of pent-up demand before COVID, which we were seeing in the Jan, Feb, and March partial numbers, and that has now sort of resumed its upward and onward activity. I'll be sharing these next few slides that I received from one of the coaching companies, Richard Robbins. They kind of summarize the data really well, and I'm going to walk you through them as we go. So this particular slide shows you the sales, active listings, month of inventory, average price, and the days on market. These are all great indicators to watch out. So this kind of puts it in perspective as to what's been happening since January. So in January, we had 4,500 sales, 7,200 in Feb, and March was going to be really, really strong, but then COVID happened with March and that dropped. And then in April, dropped to 2,900. And again, you got to realize that this is 2,900 bang in the middle of the pandemic, at the height of the pandemic, so to speak, or the of the cutbacks. And then May is 4,600 transactions. That's almost a 55% gain from the month of April. And active listings are up 8.4%, but the showing activity is up 55%. So what that leads to is the months of inventory, which is really our indicator to determine where the market is going. Is it a buyer's market, seller's market, or a balanced market? Anything between 4 to 6 months is a balanced market. Anything less than 4 months is a seller's market where prices continue to go up. And anything over 6 months is a buyer's market. So in January, there was only 1.7 months of inventory, 1.2, 1.3. And in April, it kind of climbed to 3.5. The good news is that after the 3.5 months of inventory, it's fallen down to 2.5 months. And that's again because there's a lot of buyers, not enough listings, which is resulting into whatever was listed on the market is getting soaked up very, very quickly. Average price in the month of January was 839,000. Then it climbed to 910, 903, and it's at $864,000 right now, which is up 5.1%. Days on market, it was 27 days in January and it's 32 days now, and we expect that to fall in the month of June. Sales really got a head start in January. The activity was up 14%, as you can see here in the month of January, year over year, almost 45% in the month of February, and March it was up 11.5%, and that's, again, it would have been a much higher number had COVID not showed up, and then minus 67% for the month of April, and then minus 53% for the month of May. So we're beginning to shrink that gap, and I think June is going to be even lower. This slide shows you the average price by month from January all the way to May, and this is somewhat surprising for a lot of people. So in January, year over year, prices had jumped 12%. In February, prices jumped 16%, and in March, 14% year over year. In April, in the middle of pandemic, we still had a very small gain, which is 0.2%, almost flat. And then in May, we're up 3% again. So average price is not a great indicator to find out where the market is headed. But the real indicator to look at to predict where the market is headed is the months of inventory. This really determines if it's going to be a buyers, sellers, or a balanced market. So as I mentioned, anything between 4 to 6 months is a balanced market. Anything less than 4 months is a seller's market. And that's how it's been in Toronto for the longest time. So if you see this chart here, we've got 2017, 2018, 19, and 20 charted out for you. And the yellow line is basically the months of inventory for this year. So you see it started off very strong. There was no houses on the market to begin with, very, very little inventory. And then it was dropping in February and March. And then all of a sudden it had a pretty steep climb. And then now it's dropping again. So 2.5 months of inventory right now, which still places the market strongly in the seller's territory, meaning the prices will be going up, and they are going up. We're seeing multiple offers across the board in a lot of different areas. So where do we go from here? I mean, it's almost impossible to predict where the market is going to go at this point. There's demand that we see on the market today is just the pent-up demand from the previous year. You know, January, Feb, March were really, really strong months. And I think we're seeing a lot of the buyers coming back on the market. So June numbers are expected to be higher than May. So we are seeing a lot of activity. We are working with a lot of buyers right now. We're working with a lot of sellers, and we're having pretty amazing success with all our listings. So the buyers are out there, they're motivated, they want to buy. Another interesting development that happened yesterday is CMHC came out with another round of mortgage lending guideline change. And essentially, they are tightening the lending guidelines one more time. So unemployment is a key factor. We really don't know. We don't have a clear direction on where that will head. The economy is opening up slowly. How quickly the jobs are going to be absorbed, that's still to be determined. But for people whose CERB payments and whose mortgage deferrals are running out, they might be forced to put their houses up for sale in the fall. So that's something that we're going to watch very carefully. And that might kind of balance out the market a little bit. You know, that puts a little more supply on the market, and then kind of balances out the market so that it's not kind of a complete runaway seller's market at that point. And there's going to be a gradual return to the new normal. I had numerous conversations with people who live in the city. Will people start moving out to the suburbs more and more? Will they need more space if they continue to work from home? How will that impact our demand and supply on the condo side? And it will also have an impact on the commercial real estate activity in the city. So in a nutshell, there's a lot of activity on the market. Buyers have again jumped the market before the sellers. Sellers, I think, will show up to the market in June, July, August, and that should balance out the market a little bit. But again, a lot of it depends on how quickly the economy is reopened. But as I've always mentioned, that real estate trends are local. So if you are interested in finding out details about your specific community, please feel free to reach out to us, and we'll be more than happy to share the statistics and trends in your local neighborhood. Thanks for watching, and have a great day.